Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve. Today I'm joined by my colleague Justin Nielsen. We'll talk about another up and down day for the market, but some buying into the close, and indexes looks like they closed near highs. But before we talk about the market action, I want to throw things over to Justin because he's got three stocks to watch.
Two stocks and an ETF. So just like
Okay.
yesterday, where you guys kind of went over the TAN Invesco Solar ETF, we'll take a look at the Sector Spider ETF on biotechs today. That's XBI. Also take a look at Chipotle Mexican Grill, which looks like it may be setting up after a long base, and Archer Daniels Midland. Hey, there's still some defensive action going on out there. So we'll take a look at those.
Excellent. Okay, well, let's start by taking a look at the NASDAQ composite. And yeah, it doesn't, it looks like we closed near highs with the composite up about 0.6%. But just in the daily chart here shows that there still are some challenges that the NASDAQ needs to overcome.
Yeah, I mean, first of all, you've got that 12,000 level that's right there, where its 50-day moving average line is, and the although it looked strong today, I mean, there was a lot of back and forth. If you just take a look at the intraday chart, you can kind of see that there was a pretty big drop during the day, and then we recovered. So it certainly wasn't a straight up type of follow up to yesterday's action. Over at the S&P 500, we're kind of facing a similar story. So zero S&P 5, you're looking at a 4,000 level that is acting as potential resistance, which is right where its 50-day moving average line is. So, as strong as these last 2 days were, it's a little bit hard to get too excited with those potential resistance areas. And that's not all. I mean, you have the June highs that are going to be potential resistance, and then there's that 200-day moving average line, which has proven to be very pesky.
Yeah, definitely. All right, let's take a look at the Dow Jones Industrial Average. That was up 0.6%, and then the small cap Russell 2000 small cap. We'll take a look at IWM here, and you can see, Justin, this closed just a hair below the 50-day moving average. So tomorrow looks like it'll be an important test for the Russell 2000.
Yeah, and it's going to start becoming an important test for all the indexes, but the Russell 2000 may be the first one to go. And look, the growth names were, looking a little bit better too. A lot of times we look at FFTY, which represents the IBD 50, to kind of see how growth was doing, and that was up a full 1.6% today. So, it's tough though because we're obviously still in a downtrend. You look at the overall action, and we're below our 200-day moving average line. We're just getting up to the 50-day line. So this is really going to take a little bit more strength before it's anyone's ready to give an all clear signal here.
Definitely. And then bond yields up a little bit today at last check. The 10-year Treasury yield up about 3 basis points or so to 3.29%. Justin, the yield definitely looks like it's finding a new home above the 3% level here. We had a interest rate hike by the European Central Bank earlier today, and then comments from Jerome Powell also earlier today, just before the market opened, that the Fed is going to be raising rates. There's no doubt about that. And the market is pretty much pricing in right now a 75 basis point hike later this month.
Yeah, I think everyone's kind of getting comfortable with that. And as you mentioned, we're certainly getting comfortable back here above 3% on the 10-year. And, this is definitely at 11-year highs. You go to the monthly chart and put it in the perspective. This is we're at levels we haven't seen in a while. But that's what everyone's kind of saying is what's needed for this high inflationary environment, and they've been kind of coming up with a consistent message. I mean, we had a few of the Fed members speaking yesterday, Powell today, and I think they're all trying to show some unity here that they're going to do what it takes to stamp inflation down.
Definitely. All right. Well, let's start by taking a look at. I guess we'll start with the ETF XBI. There was a lot of good action in the market today in the biotech sector and the healthcare sector. So let's just switch to the daily chart here first for XBI. XBI, and what are you seeing here, Justin?
Well, we are above the 50-day moving average line on XBI now, but we're right there at the 200-day line. So this is something that I think is worth watching. If you kind of take that step back, maybe look at the weekly chart, you can see that back in May and June, we kind of got to this area of support that was, I mean, you could go back to 2020, 2000, 2018, 2019, right around 60. If you just kind of draw a line at those lows, you can kind of see that what we hit back in June and May was right around those same levels. And so we had a pretty strong rise there up to the 200-day line, just like we saw with
Hmm.
the indexes. And it's been holding pretty well, really hasn't given up the majority of those gains. So this is one that I'm watching. We certainly had a lot of action in some biotechs today. I mean, some big numbers. Rhythm Pharmaceuticals, RYTM, that was up like 14-15%. Immunocore, IMCR, that was up 12%. ALNY, I think you mentioned that on IBD Live today. That was up 8%. So there were a lot of the biggest gainers today that were hailing from the biotech area. So I think this is just still an area to watch. Sometimes it's a little bit easier to play the ETF because with the individual stocks, you have all sorts of clinical trials and endpoints and FDA approvals and things like that that can either give you a big boost in your stock or potentially tank it. And so sometimes the ETF can kind of let you play the industry and the sector without that individual stock risk.
Very good. Well, yeah, lots of good action below the surface today. So definitely keeping an eye on these biotech stocks that made pretty bullish moves today. All right, moving on. We're going to go inside the restaurant group here. Been seeing signs of life among certain fast casual chains. So let's take a look at Chipotle Mexican Grill. Looks like a interesting setup here.
Yeah, so I mean, this is a pretty deep base. It was a 39%, correction that it had, that started kind of last year in August, and once you get to about 40%, that starts getting a little bit concerning. And what I usually like to see after that is some evidence that it can tighten up afterwards. And so that's what we're kind of seeing in the handle right now after that long kind of slow decline. It's now kind of having this handle, and we've crossed above a downtrend in that handle after getting support right around 1600, right around the 21-day moving average line, and we're moving up from there. I'd like to see a little bit more volume come in. The volume has been average, which we've been seeing a lot of below average volume lately. So I'd like to see some of that volume continue to come in, and you could make a mark right there at the high of the handle too, at 1,724.97.
Mhm.
We add 10 cents to the high of the handle, and that could be another buy point. Although we have been a little bit hesitant with breakouts lately because, especially with a lot of sector rotation and a market that is still in a downtrend, sometimes those early entries can give you a little bit of a better shot at holding a stock, whereas a lot of the breakouts we've been just noticing over the past few months have failed pretty quickly. So just be on the lookout for that.
This was one heck of an earnings report that Chipotle came out with
Yeah.
when it first gapped up right here, and you can you see not only did the stock hold gains, but it just continued higher after that. So this is a pretty good, pretty decent looking handle that formed here. So this one is definitely on breakout watch, and we'll see how things play out with Chipotle. And finally, another. Pretty decent setup here in Archer Daniels Midland ADM. Uh, Looks like another cup with handle base here.
Yeah, and Arusha and I were talking about utilities on the on the podcast yesterday. That just dropped today. So one of the things is there does seem to still be some of this defensive bent to the current leadership. This has got a blue dot on MarketSmith where the relative strength line is. That means that this is something that has been outperforming the S&P 500, and while it's been basing. So that's usually something that we see as a positive sign. The trick here is that we've been seeing a lot of blue dots in very defensive areas. is. This is in the food, grain, and related. They're dealing with the agricultural commodities and things like that. So this is not normally one of those things that you would think of as being high growth. However, it does have a composite rating of 96. You look at those numbers at the bottom, and they're pretty respectable. You've got some acceleration here in the earnings from 9% to 24%, 37%, and then 62% in the most recent quarter. The revenue growth is not accelerating necessarily, but it's still got some decent double digits there. So it does have that fundamental side of CanSlim, the C and the A here. As well as this nice cup with handle pattern. And so it'll be interesting to see, can this work out? If there is a shift to more growth names, then you would kind of expect some of these more defensive things to not do as well. The money to flow from there back into growth. But ADM has shown its ability to make a move before. This is something that's been moving really since 2020. And unlike a lot of the stocks that did so well in 2020, this one seems like it's still acting in a pretty constructive fashion.
Most definitely. Yeah, it seems like right now the market leadership. I mean, a lot of stocks that are, doing well, like Archer Daniels, Midland, and CMG. There, a lot of them are outside the tech sector, and maybe not surprising. So if we do get another tradable rally on our hands, don't necessarily think that tech has to lead. I mean, just keep watching these videos and keep going to investors.com and see which stocks are leading the market. So a good cross section of names that we went over today. Justin, appreciate the input very much. And tomorrow, don't forget to join IBD Live because Charles Harris, a longtime portfolio manager with William O'Neill and company, is going to be a guest. He hasn't been on in a little while, but we always like to hear his take on the market. And if you haven't checked out IBD Live yet, you could just go to investors.com/IBD Live and try it out for free. So Charles will have a lot of great stuff to say tomorrow. Again, Justin, thank you very much. And let's see, Ali will be back tomorrow with Ed Carson to wrap up the week. In the meantime, thanks very much for joining us today, and we'll see you back here tomorrow.